Let's review closing entries. So before we get into the journal entries themselves, let's talk about the process of closing entries. So first you close your revenues, then you close your expenses. Where do you close those accounts to? To this new account called Income Summary. So first we close revenues to Income Summary, then we close expenses to Income Summary. Your third step is to close Income Summary. Where do we close Income Summary to? Owner's Capital. Then, step number 4 is to close Owner's Drawings to Owner's Capital. So you have some temporary accounts and then permanent accounts, right? Revenues, expenses, Owner's Drawings, and Income Summary could all be considered temporary accounts because they are closed. Owner's Capital is a permanent account. You never close Owner's Capital. You are closing other accounts to Owner's Capital. So let's walk through this example. We have some account balances over on the left side, and we're going to close all of these accounts. So we said the first step was to close revenues to Income Summary. Whenever you want to close an account, what we're doing is we're making that account's balance 0. So service revenue has a $40,000 balance, and it's a revenue account, so that's a credit balance. So to close out an account that has a credit balance, we debit service revenue $40,000. Because if we debit $40,000, that will bring its balance down to 0. Now we close this revenue account to Income Summary, so we'll credit our Income Summary $40,000. So the next step is to close all of our expenses. So we have 4 different expenses here, right? Salaries, rent, travel, and postage. Those are all debit balances. So to close an account that has a debit balance, we need to credit that account. So we will be crediting our salaries expense, rent expense, travel expense, and postage expense. And we close all of those expenses to Income Summary. So we debit Income Summary $21,000, which is the sum of your 4 expenses. So now step number 3 is to close Income Summary to Owner's Capital. Before we make that entry, we need to figure out the balance in Income Summary. So we're going to make a T account. In the first entry, we credited Income Summary $40,000, and then we debited Income Summary $21,000. So its balance right now is a credit balance of $19,000. So to close an account that has a credit balance, we need to debit that account, right? So we will be debiting Income Summary $19,000. Now where do we close Income Summary to? To Owner's Capital. So we credit Owner's Capital $19,000. So now step number 4 is to close your Owner's Drawings. We see over on the left that Owner's Drawings has a balance of $4,000. And the Drawings account has a debit balance. So to close an account that has a debit balance, we need to credit that account. So we'll credit Owner's Drawings for $4,000. And we close our Owner's Drawings to our Owner's Capital. So taking a look at these last 2 closing entries that we made. When we closed our Income Summary, you'll also hear that as closing your net income or loss. Right? We found that $19,000 by taking our total revenues and subtracting our total expenses. So $19,000 is our net income. If we think back to the owner's equity statement, net income is added on that statement. Well, crediting owner's capital will increase your owner's capital balance. So we are adding that net income to our owner's capital in that entry. Now, closing owner's drawings, drawings are subtracted on the owner's equity statement. And when you debit owner's capital, you are decreasing that account's balance. So the third and fourth closing entry is illustrating the statement of owner's equity in journal entry form, right? It's showing the increase in capital due to our net income, and it's showing the decrease in capital due to our drawings. So now we can figure out, after all of these closing entries, what's the balance now in owner's capital? Well, it told us over on the left that we started at $55,000. So we'll put that in our T account. And then we credited owner's capital $19,000. And then we debited $4,000. So we can find that the balance in owner's capital is $70,000.